Ethereum hits an all-time high. With that comes all the stablecoin news, and you'll never guess who's launching a stablecoin. We're going to talk about it on the show. Welcome to Network Spotlight, the Mick and Mike edition. I'm Mick. That's Mike. How's it going?
Good, man. How's it going? How's the weekend?
Weekend's great. I'm feeling energetic. I don't know if it's the ice bath or what, but I'm really feeling good about today's episode.
You still on that ice bath thing?
I am. You know, I gotta keep myself sane. That's how I do things in crypto.
What's next, man? Ayahuasca to find yourself?
I don't need anything else. I have crypto. I'm good. Oh, yeah. I'm sane. I promise. You're not losing your co-host. We're good. So let's start with the big news, Mike. Ethereum hits an all-time high of 49.20, I believe it is.
Yeah, looks like 49.26 on CoinGecko on Sunday, yesterday. Yep.
I can't believe we're excited about 49.26, but here we are, excited about another all-time high. How does it feel?
I think the big news that kind of sparked at least this pushed over the all-time high was Jerome Powell hinting that an interest rate could come. A lot of this is driven by the digital asset treasury Meta. Right? You've got Tom Lee's BitMine bought over $2.2 billion of ETH last week. Joe Lubin at SharpLink bought another 667 million. ETHZilla, one coming out of nowhere, buying another 7,500 more ETH. Like all of these, I think a couple weeks ago, there was over $1 billion of inflows to ETH ETFs. So, the institutions are absolutely scooping this up. I think it's coming back to that ETH is the most attractive asset for these institutional buyers and those who are the institutions that are trying to deploy on chain. So, it's the most trusted smart contract platform. It's been around the longest, and there's a lot of it's decentralized, so there's a lot of trust in the chain and it's clear that these institutions are just piling.
You mentioned something important, the most trusted. It's not the fastest. We already know that it's not. Solana has them beat by a mile, but it is the most trusted because Solana has had so many crashes. I think a lot of institutions are looking at that saying, you know what, this is still faster and cheaper than what we've been doing. So let's just use Ethereum for now. And I think gradually over time, especially once you have the approval of the ETFs, you start to see more of a shift. And look, don't get me wrong, like USDC is already on there. You've got like Visa and major players are already on Solana. But right now it's Ethereum's moment to shine. And with Ethereum, you've got all of that stablecoin volume. And one of the things that's coming out of the state of Wyoming, Mike, is we've got our very first state. Is it a state-backed stablecoin? Is that correct?
Yeah. The Wyoming Stable Token Commission launched the mainnet of its first official state-backed stablecoins called the Frontier Stable Token, FNRT. FNRT will go live on 7 blockchains. Most of these are Ethereum EVM based, right? You've got Ethereum itself, Arbitrum, Avalanche, Base, Optimism, Polygon, and then also Solana. And it's designed for, just overall retail and enterprise use. It is the first state-backed stablecoin. And it will maintain interoperability through Layer Zero's cross-chain protocol. This is, you're going to have, I think, everyone's launching their stablecoin. We're going to talk about MetaMask stablecoin up next.
Oh, you gave it away.
I gave it away.
Let's keep it a secret.
Let's roll. Let's roll into it.
Let's go.
Let's roll into it. You look at MetaMask. They announced their own stablecoin, MUSD. First of all, there's like 1 million MUSDs out there already. There's the Mantle USD, Meta Stable USD. Throw another MUSD in the mix, but MetaMask is the first stablecoin launched by a self-custodial wallet. They're built with Bridge, which Stripe purchased a few months ago, and M0, And they're going to use this. They're going to use MUSD to really drive the DeFi ecosystem on Linea, which is, of course, Consensus's L2, and it's going to be play a big role there. But you're able to do on ramps, swaps, bridging, all through directly in the MetaMask wallet. So very nice integrated features there. Soon it'll be spendable via the MetaMask card that they launched at millions of merchants that accept Mastercard. So yeah, I think look, everyone's, like I said, everyone's launching their stablecoin. Everyone wants a piece of the stablecoin meta. I think it kind of makes sense for everyone to launch their stablecoin to a certain extent. But we talked about interoperability. Like, how is that going to work? We have been talking about account abstraction and chain abstraction for a few years now. With the trying to deal with the UX issues of going across bridges. And we're not quite there yet, but that problem is going to need to be solved in a very UX friendly way in order to make kind of all these stable coins usable and interoperable with each other across all of these ecosystems.
And then there's the proof of reserves aspect of this, because all of this is pegged to the US dollar and you have to prove
Right.
that it is. And all of these companies are going to have to go through some form of a financial audit. So I think Deloitte's of the world and PwC's of the world, they're going to have their hands full with these tokens, Mike.
Yeah, that's definitely going to be something, especially that's one of the key aspects of the Genius Bill, right? Is to make sure that a lot of these, all of these stablecoin issuers have those reserves in either USD or US Treasuries, or some kind of liquid collaterals. The passing of the Genius Act was a massive catalyst for all of these institutions and companies to launch their own stablecoins, because prior to that there was a lot of gray area. There was just a lot of opacity around what the regulations were about launching stablecoins. So that was obviously a big catalyst. But now we're getting everyone and their mother launching their own stablecoins and trying to get a piece of that. We talked about Circle, right? We looked at Circle and how their IPO popped like crazy. Which I don't know, fundamentally doesn't make all that much sense to me in terms of that valuation that they've maintained. But there's like nuances around their business model and all that. But everyone's jumping in, and it's obviously a super hot space. And to a certain extent, it makes sense for a lot of these companies to have their own stable coins to control the user experience and try to use that as a tool to own the user. I'm sorry.
And I just keep getting excited about all of these doors opening up to the just wide crypto market, right? Just because you're entering with a stable coin doesn't mean you end up with a stable coin. You might go from the MetaMask USD into Ethereum, into Avalanche or Solana. Who knows? You've got all of these other options. And so for those that are watching, maybe newer to crypto and wondering, okay, like, why am I getting excited about a coin that is going to max out at $1? The main excitement here is that you're opening all of these avenues for more users to come in. It's their on and off ramp, and making it a lot easier for people to get access to crypto, which is ultimately good for the industry.
A lot of people, newbies who come to the space, are turned off by the volatility of cryptocurrencies, right? They see it as a just a means of speculation. And what we'll talk about the next story was, we'll definitely
don't give
it
away.
I'm taking the lead on transitions now.
I see that.
Just kidding. But right, that is a thing that a lot of non-believers always say, that okay, there's tens of thousands of cryptocurrencies all used for speculation. No one knows how much they're worth. There's no way of valuing them. There's very little reason to use them as mediums of exchange. Now, you have a stablecoin that makes a lot of sense, right? It is is pegged to the US dollar. And, in those emerging, in the US and mature markets, obviously a lot of people know what that means. But maybe even more importantly, in emerging markets, those citizens, when, super high inflation economies, they want access to the US dollar. And stable coins give them more access to the US dollar. And then, like you said, once they get on chain with a stable coin, then they're able to discover everything else, hopefully dig deeper and go down the rabbit hole, discover that everything else that cryptocurrency and blockchain provides, in terms of decentralization, censorship resistance, etc. So it is definitely a massively important way to onboard new people into the crypto ecosystem with something that they are, in a way that they're very familiar with already.
And now you also have yield bearing stablecoins, which is a little bit more risky. There's a lot more nuances that go into it. It has to do with how good is the team, funding rates. Like it gets really complicated. So it's a topic for a different discussion.
Yeah.
But just to kind of want to emphasize that stablecoin just in itself, that sector is so vast. There's so much to learn there. And I feel like we're just scratching the surface here.
But just another point on that, again, yes, that's a very kind of very different area of stable coins that I think is extremely important and is super interesting. A lot of these banks, so recently a lot of these big banks, and I think it was the American Banking Association, is trying to change the language in the Genius Act to avoid yield-bearing stablecoins to like ever exist. And
I
because
wonder
it is
why.
it's a massive threat to their business model.
Yep.
Massive threat, right? Where if I can park my money in a stable crypto that gives me yield, what is the point of me parking my money in a bank account that admittedly gives very shitty yield, and then allows the banks to make all this money by lending that out for mortgages and all that kind of use cases, right? So like that is something that everyone should be watching very closely, because the banks feel threatened because their business model, that really offers very little to the people who park their money in these bank accounts, is being severely threatened with yield bearing stablecoins.
And I feel like Athena is kind of taking the lead as of right
Yep.
now in that sector. And I actually just spoke with the CEO of Aegis. He's taking on Athena. So he also has a yield bearing stablecoin, Bitcoin backed. So it's a very interesting discussion for anybody that wants to check it out. I'll be sure to include the link to that. Very educational. But Mike, let's
Yeah.
talk about something that is completely opposite of stable. And that's Kanye West, unfortunately. But he's in the news again. He launches a coin. I guess I should be more specific. He launches a meme coin
Yep.
called Yeezy on the Solana.
Yep.
Surprise, surprise. But I want to say that you could leverage, like you could trade Yeezy on leverage on hype, I believe.
Yeah. I think
So
so.
like for
Yeah, you can.
the ultimate degens out there, you can
Yeah.
leverage, but not smart, because from what I understand, this token uh like dropped within like 40 minutes, and it was like held 95% of it was held by insiders. Mike, what can you tell us about the story?
When will we learn? That's all I'm gonna start this out with. Like, when will we learn? When there was a lot of celebrities launching meme coins, Kanye was like, they're like, meme coins prey on their fans, right? And he was like he's like, I'm never gonna launch a meme coin. Of course, he comes around, launches a meme coin, and part of that was like people thought he might have gotten hacked because of what he said in the past, but it was true. It was all over his website, on his Twitter, and it was all quote unquote legit. So yeah, like people piled in. It was like within 40 minutes, market cap surged to around 3 billion. But then, like you said, it was about 95% of the supply was controlled by a handful of insiders. So clear pump and dump. Now it's sitting at only like $73 million market cap. Like ridiculous. Uh, there was an estimate and that retail investors suffered losses of over $20 million. And when are we gonna learn? Like, this is the kind of stuff that, look, I hate to be just like the guy who like bitches and moans and about everything in this stuff, right?
The old
But
guy
like,
that's complaining.
right, like I'm yelling at the clouds in the sky. But like, I mean, this happens over and over and over again. And like and everyone, I'm talking to a bunch of traders and they're like, when is alt season gonna happen? When is alt season gonna happen? Right. And we're kind of getting signals, right, with ETH hitting all-time highs, with the Fed potentially cutting rates, and it's kind of setting up for this. And then we just like go back to the meme coin craze, and people just lose their shirts. And it's just a typical story over and over again, right? You've got this celebrity that just essentially preys on his fans. And no, yeah, I don't know how many times we got to go through this to learn the lessons. I thought that we were mostly out of that kind of pump fun meme coin phase, but I guess not. We'll see. But like, I again, I hope that meme coins don't continue to steal the thunder of altcoins that are, building real products and actually pushing the industry forward. Again, there's my boomer rant, angry at the world.
I'll play devil's advocate on this, Mike.
Okay.
We have casinos, right? I don't know the statistics on this, but I would be very interested to find out, on average, how much do people lose in casinos? Because that never makes the news. Billions of dollars. Okay, so if you compare that to this token, like, I get it, it's a celebrity, they launched a token, and it's also crypto, right? So everything's publicized. People want to poo-poo on crypto. That's absolutely fine. But if you compare it to casinos, like, what does that look like in terms of losses? I'll have to do some research on that, because if I look it up and I can see that it's very similar, then to me, this is no longer like a big deal. Honestly, I get it. We're trying to establish ourselves, but look, come on. If people lose their money in casinos and nobody writes about it, like, why are we making this a headline story? Right? That's just how I look at it.
So again, like, this is the great part of crypto, is that it's permissionless. You can launch whatever the hell you want to launch. You can do whatever you want to do. No one is going to sit in the middle and say you can't or can't do this, right? At least we're not at that point yet where, I don't know, whatever government role government's going to take in that. But it doesn't mean I can't complain about it, right? Like, it is also permissionless for me to complain about what's happening. And it's like people are asking to be extracted from. The
they
more
love the pain,
right? The more often this happens, the more celebrities are going to do it, or the more grifters are going to do it. And it is, I hate to see it, because it you can argue, if you want to take devil's advocate again, it's like meme coins, bring in new users, but right, and they onboard new users. I definitely agreed with that more when we were in the age of, again, this is boomer me, the age of like Doge and Shiba, right? And like kind of those, dude, even like those that had some kind of, I want to say, like current event things with like politics, like the politics meme coins and the funny meme coins, right? Like, it just, I just think it is net negative for the space when you just get people just losing a lot of money, and very quickly, and then they never come back. And it's tough. It's tough to deal with when we are, obviously I've got a personal bias on this, that I'm investing at the earliest stages in these companies that are building products and will eventually launch tokens, right? And look, who's going to bid on those tokens? And those tokens going to get a bid at some point. I don't know. It's tough.
But in reality, Mike, the VC game is tough on retail as well, right? So we want more people to invest in like this cutting edge technology, but some of these teams, the kind of funding that they're getting and like the low flow LTV, like it's insane what that investment looks like for them, So of course, naturally they get pushed out and they gravitate towards something like this. And a lot of celebrities are wanting to, it's like a influence flex, right? They want to see how much influence they have. And it's not even about the money for them. It's about how much influence they can have over people. And that's ultimately what this is with these celebrity coin launches.
Okay. We can argue like, all right, look, Yeezy does not need to launch a coin. The dude is, I don't know if he's a billionaire, but he's close, right? He
He's
might
up
be a
there.
billionaire. All right. Like he doesn't need to launch a token. It's obviously not about the money, but I think he is working with people on this who are driven by money and are leveraging his personality and his fame to make money. Look, 95% of the supply was controlled by insider wallets. Like, do you think Yeezy really needed to do this to make more money? No. But like you said, he's like not that stable, and he's like working with these people, easily convinced by these people who just dump on retail. And and then you kind of just look at all these other celebrities like the Hawk Tuah girl and if you want to call her a celebrity, maybe she was probably more driven by money, but also to some certain extent, working with people who are driven by money and wanting to dump on retail. But there's some celebrities that kind of did a pretty good job with engaging their audience with events and all kind of stuff. You can look at Libra, the Javier Milei token. Obviously, look at our president. I mean, there's just go down the line. You're gonna see 99% of them are just absolute crap and rug pulls and pump it up schemes, and a small percentage of them are actually going to use a meme coin for like community engagement and whatever quote unquote utility.
But I will also say, Mike, when Doge came on the scene, Shiba Inu, at the time, we didn't really know that they were going to be, what they are, right? So I'm not saying that celebrity coins have a chance to be this like tradition, or it's like here to stay. But a lot of times with these coins, like you don't really know until like you look back a year ago, 2 years, and then you think to yourself, okay, like that was a sustainable project, not a rug pull. So, but with celebrities, I agree. Yeah.
So, and that's what I'm saying. I think now we should know. Shouldn't we know after the 100th celebrity coin that absolutely, when you look at the chart of like, of Yeezy or Melania or like down only, like, shouldn't we know by now?
I mean, there's also Iggy, right? I think she's trying to hold her own. I don't know how it's
that's
doing,
what I just mentioned.
but...
Yeah. She was kind of one of those that actually did something with it. But like, again, like, do you have to, the issue is like everyone's piling in because they want to get maximum profit. They want to be the earliest. They don't wait until you see whether or not this thing might be real. And then they quickly find out the hardware that it's not real.
That's just consumerism. They want to be the first ones with the iPhone. They want the first one to get the lipstick, like all that stuff. It's part of just consumerism. So I think we gave this story enough attention, Mike. Let's move on to the next segment. And for those watching and you want to get a sense of like, okay, what about the experts? What are they looking at? What kind of technology are they evaluating, or where are they putting their money? So this next segment is Mike is going to share with us 3 different projects. They secure serious funding. And it really is a really nice insight into where the money is going. So we'll start with Almanac. Mike, what can you tell us about them?
Yeah. So Almanac is a DeFi smart agent platform. They raised 8.45 million from Delphi, Hashkey, Bankless, and others. So What is interesting about this one, and we've talked a little bit about this before in terms of like having smaller, more specific use case agents. And Almanac kind of has this swarm system. They right now they have 18 specialized agents that allow you to optimize, automate, and execute personal trading strategies across multiple blockchains. Right. So for example, they've got agents for like trading strategy, for optimizations, kind of a supervisor agent that connects all these agents. So, and many others. So, like that's why I think the future, certainly the, massive LLMs are going to provide a lot of value, like, the open AIs and the Claudes. But for specific use cases, specific products, I really like the trend of AI agents, very specific AI agents focused on a single use case and then coordinating amongst those. So they're easier to train, they're more efficient to train. You don't need as much computing power because they're not so general. But then coordinating with each other to share the information, and I think that's a very efficient way to build to build a overall agent, like in Almanac's case, Swarm, to execute these DeFi strategy trades.
Are you familiar with any of these swarms that are just been successful at implementing strategies, like trading strategies, just DeFi strategies in general?
I mean, I don't have information on like returns or anything like that. I think it's too early to tell. A lot of these agents, were probably launched mostly in 2025. So I don't know if many of those have outperformed the market or whatnot. So I can't answer that question. But I think certainly the foundation of those agents and those agent systems are being built right now.
Gotcha. Okay. So next up is Iris. What are they up to? Looks like they secured 10 million in Series A funding led by Coin Fund.
Yep. So Iris is an L1 data chain. Like you mentioned, they raised 10 million from Coin Fund, and participation from Hypersphere, Tyke Ventures, and others. So this is interesting, right? So on one hand, you kind of have these smart contract platforms like Ethereum, like Solana, that they're execution layers. Then you've got other kind of data storage chains like Filecoin, IPFS, and Arweave. So that whether it's temporary storage or permanent storage, like you just put your files on there, puts your data on there. So Iris integrates these two, and they enable developers to kind of like you can store this data, but then you can embed instructions into this data and make it actionable and executable on that data. So this can be really helpful for AI applications, and it can like carry out interaction rules with other applications. You can enforce like predetermined royalty structures with the data that's being stored on Iris. Data creators can monetize their data, control access to their content that they're storing on the data layer, and I think you've got a couple of different pieces of the AI stack that is being combined in a single L1 to make it more the use of data more seamless, and the ability to monetize that data a bit easier.
I mean, I think it's a long road to get to the point where we do find like a decentralized alternative. Do you feel like there's like a strong potential of that eventually happening down the road?
Oh yeah, definitely. And there are definitely hurdles, right? There's look, AWS, Google Cloud, Microsoft Azure, they make it so easy to spin up storage, spin up servers, automate things with code, or to automate things with agents. They make it so easy to do it, and it is not the UX, overall for crypto, but also just specific to these decentralized, whether it's compute or models or data. That is clearly, that UX and that ease of use is clearly not there yet for developers. A lot of developers who don't necessarily are aware of or care about the centralization risks of using AWS and other cloud computing platforms. They just don't really wouldn't care about using decentralized versions of those. But overall, as crypto goes into more in the mainstream, um, as I think as the user experiences of these decentralized platforms become better, on ramps become easier. I think that certainly we're going to move towards a world that is going to be better off with these decentralized technologies. Especially in the AI space.
We're here for it. Last but not least, Mike, is Legion. I actually know these guys. I've met a few people that work there. It's like a community focused project, right?
Yeah, it's a community investment platform. Actually, when you pulled up I think the Twitter page on Almanac, I think it was saying they were raising on Legion. So it's pretty interesting that you had that there. Yeah. So
Oh,
Legion is a community investment platform. They raised $5 million in a seed round, led by Van Eck, Brevin Howard Digital, with participation from Kraken, Coinbase Ventures, and many others. So we talked about Legion and like Echo, Kobe's Echo, right? Is where retail investors can participate in these public sale opportunities for tokens. And I think there were it was probably a couple months ago where there were a lot of token sales happening on platforms like Legion and Echo, and there's a lot of tools, right? But it's this causes interesting dynamics with VCs. I know that. So this is essentially kind of a newer form of the ICO, right? But a lot of times the projects that are raising on Legion, I think I don't have the stats on this, but like most of the successful ones have already garnered VC funding in the past. So this is again, it causes interesting dynamics. I know like the selfish extractive VCs hate platforms like this. They do not want
yeah,
retail to get in at similar stages that they get in. Right?
right.
They want to maintain the access that before at the lower prices before retail gets in, right?
Right. This levels the playing field.
To a certain extent, right? Like it's not quite ICOs because for what I've seen, like I mentioned, the ones that do from what I see, like or anecdotally, the projects that do like initial rounds on these don't do well. They may not close the round. There's very low interest in those. The ones that do well, and we've had one of our portfolio companies, Enclave, raised around on Legion. They most of the ones have prior VC funding, and that's a signal for the quality of the project. And retail uses that as a signal. So the ones that have prior VC funding have typically done well and have closed their rounds on community platforms like this, right? So I think this causes interesting things where these later stage VCs don't want this to happen because they want to get in before retail, and then probably later on, dump on retail when there's a true public sale upon TGE. But a lot of VC funds, respected VC funds, actually had like kind of syndicates on Legion and Echo, and I think like it doesn't impact pre-seed. Where we play because we're a lot of times we're extremely early money in, sometimes first money in, right? So we love it. Like like I mentioned, one of our portfolio companies did a round on Legion. They're going to distribute their tokens eventually to their community, which is eventually what should happen, to decentralize these protocols. So we love it, and it doesn't impact us. But I think like if you get into the later stages, Series A, Series B, like those stages of VC, either I don't know if they'll totally die out, because dynamics are always changing. But like they need to reassess their value in the value chain in the ecosystem, because these public sales on Legion and Echo are happening more often, and are being supported by some of the earlier stage VCs, because that's kind of what should happen at some point is the decentralization of it.
It's funny how, you have like crypto versus the big banks, and the banks try to, limit what you can do with crypto. Like within crypto, you kind of have like your own pockets of this like David versus Goliath, and it looks like this is one of them.
Yeah, yeah, right. Like, and I think it is a lot of times just that extractive part of the industry, that like that you said, that kind of happens with meme coins and insiders there, and it also happens in kind of the institutional, legit funding world, that of VC. You still got those that extractive mentality, and it is easier because of the liquidity that crypto provides. Yeah, hell, sometimes like we talked about founders being extractive, right? With
Yeah.
those like very short, token vesting schedules and cliffs. So that is just one of the things that we have to deal with as an industry, and hopefully, there's a bit more. Uh, there's only so much you can do as, on good faith, and just believing in people. There's we'll see what else we can do to to build trust in the space. But it's going to be a long road, but we're getting there.
Yeah, if you're in the kitchen, you're likely to get burned, but
Yeah,
look, you can't have a meal unless you start cooking. So
yeah,
it's just part of the game. But live in
yep, it is.
abundance and everything else will take care of itself. Mike, you put out a newsletter every month. You focus on this stuff. Um, I'm going to include the link in the description so people can access that. And this was a great episode. Thanks so much for bringing these to us. For those that are watching, like and subscribe to the video, share it with your friends. Make sure everybody gets educated on what's actually happening in crypto. More of this, less of the meme coin stuff that is just toxic. Also, if you're a founder or operator in Web3, go to networkspotlight.io and apply to become a member. Bye, everyone.
All right, see you, everyone.
If you're a founder or operator in Web3 and want to connect with others like you, head on over to networkspotlight.io and apply to become a member. See you on the inside.